Hey, what's up guys? Welcome back to another video. In today's video, I'm going to be talking about a play I have leveraged myself 30% into. Before I go ahead and talk about this, if you guys could go to hit that like button and comment your favorite stock down below that you would like for me to analyze, it would really help support the channel, help push this video out, and help me to continue making these kind of videos where I talk about my investment advice. I also wanted to go ahead and say, we remember the SMCI play made us quite a bit this week. And this is, again, something I want to go ahead and talk about because I'm equally confident in this one play. I've leveraged out for a year out, by the way. So this is, again, a safer play on my end, but I'm very, very confident in it. And again, this is just my outlook on the stock. Obviously, we can talk about this in the video. If you guys did remember, we made about $3,000 of the SMCI puts when I leveraged up at the top, looking at the analysis, the fundamentals, the sentiment, the order flow, all different technicals that I really use for my plays. And again, if you guys are interested in getting access to my algorithmic stock plays, the link for the Patreon is in the description. I've programmed an algorithm which throws out plays every day based simply on fundamentals, completely taking out the emotions from trading. Now, let's go and talk about Apple. This stock is looking so good as a leverage opportunity, in my opinion. I have bought calls a year out. I did put this on my Discord a while ago, and I'll go ahead and put this here because I don't think it's a secret that this stock has fallen quite a bit. Now, I won't give you the exact stock. Now, I won't be going over the exact option strike price that I bought, but it is exactly a year out, and it's closer to in the money. So that means, again, the stock's sitting at 172. I would buy a call anywhere from 170 to about 180, 185 is the range where I would buy a call. Obviously, these are going to be sort of expensive. It's about $1,500 each, but you got to understand when a stock call is about a year out, you're essentially getting the leverage of shares, but you are paying a fraction of the cost. So if I were to buy 100 shares of Apple, I would be spending $17,000, but with these calls, I'm only spending $1,500. Now, that's obviously not the same as buying Apple shares. I'm not going to see the exact same level of return. There's more risk, but you can most definitely get, a good fraction of that return, about 60 or 70%, depending on how you leverage. Why did I buy about 5 Apple calls a year out at this stock price? Let's go and talk about it. So first things first, let's talk about Google. If you remember the huge mess up Google ad with their AI where they're just trying to get into the trend and absolutely mess it up, they had a pretty good fallout in their stock. We went all the way from 152 to 137, about a 20 or rather 15% drop close to, and it's recovered all the way back to the top, right? It's at its all-time high. With Apple, we haven't really seen a big mess up. Every single time Apple releases a product, it's been thoroughly tested. It's never had a huge mess up like Google did. And Google's up. Every single tech company's up except Apple. And part of the reason is Apple really has not announced any major AI plays, right? People are going to say the DOJ is is suing Apple. This has happened 1,000 times over. If you guys remember the whole Meta thing that Mark Zuckerberg had to go through about a couple years ago, and now Meta is at an all-time high. If anyone can take a look at the general trend, you would notice that Apple is most definitely underrated, in my opinion. And again, this is what I believe in terms of market trends. Now, if you have a crash a year out, that would just be extremely unlucky. But looking at all the other tech stocks in the same sector, the giants, the FAANG companies, I mean, they're all at an all-time high except Apple. All right, Meta was at 1,100. It went up 350% since then. So Apple has not seen that same level of return. In fact, Apple stock, if you go back to the 1-year analysis, is only up 7% for the year. And it's down close to 12% since its all-time high, which is obviously not a very large amount, but it also gives you time to leverage into a good play. So what I did was I bought calls a year out. Now, I want to say if you're buying calls, don't buy it a month out because a lot of retail investors are stocking into these calls. So just wanted to talk about this, right? We had a lawsuit with Apple saying, hey, they're going ahead having a monopoly on their own services. And then the DOJ is like, hey, you might have to reveal your secrets. Another thing I want to talk about is when you see a lot of negative news about a certain company, and it's time to load up. What it does is essentially we've already uncovered this a long time ago. Most of these financial media outlets are owned by hedge funds or partly owned by hedge funds. So the news that's put out is always going to be delayed. So right now when retail's thinking, let's get out of Apple, Apple's going to go ahead, get on a discount. Hedge funds are going to pile in. The stock is already up 2 months from now. And retail's like, oh, wow, we should have just bought. This trend repeats itself over and over, and I'm super confident in my Apple call. So I had bought some, Now I could be wrong. If I'm extremely unlucky and the market crashes one good day, I mean, yes, I will lose a good amount. It's not going to get hit very hard because, again, I plan to get out of these calls 180 days out. So I bought calls 360 days out. I'll get out of them 180 days out. So the theta burn won't be as bad for the last 180 days. So I will still have some leverage to get out. And there's definitely some room to move. So that's what's looking at. Now let's talk about the dark pools for Apple. I mean, I have never seen a stock and been so bullish in a very long time, especially a heavy hitter like Apple, right? This is an opportunity I don't think many people get. So short volume percentage, nothing out of the blue, right? It's always been about 30%, which is very, very good for a stock. That means hedge funds and institutions are not betting against it. Anything above 0.5 means they're shorting more than they're buying. Anything less means they're buying more than they're shorting. Pretty intuitive. So the last couple of days, it's been 0.32, 0.36, 0.37. And again, it's been around this number the last month or so, right? We haven't really seen a huge deviation. If anything, the short volume percentages were slightly higher about a month ago when it was at its all-time high. So it was getting shorted back then, which makes sense. It was at its all-time high, got shorted. And now it's not getting shorted as much when it's lower. That means it's time to pile in, right? That's very, very intuitive. So bad media articles means a stock's probably going to do good. Order flow is looking great. And another thing I wanted to talk about is Apple has not announced a huge AI move so far. Almost every big company has announced, hey, we're using AI for this, we're leveraging AI for this product. But we got to understand, Apple controls the technology sector. It's dominating. Even with MacBooks, iPhones, streaming now with Apple TV, it's gotten into every single sector in the technology realm. And we haven't seen any AI news. And what we do know with Apple is that it thoroughly tests its products. It doesn't want to release a half-assed Gemini API to compete against ChatGPT and then absolutely go down. When it does reveal whatever it's doing with AI, it's going to be really, really good. So again, Apple's AI awakening is Google's Gemini, the spark Apple stock needs. Now, obviously, Apple and Google work hand in hand. They have been working for quite some time together, so their partnership's great. But this article didn't really do as much justice. I want to talk about this one. Apple reportedly held talks with Baidu about, something related to AI. They haven't given exact news about what this is. And considering Apple was just like getting kicked out of the Chinese economy, it's ironic that it would be holding these AI talks with Baidu, but it just shows the power Apple has in these countries. It's not going anywhere. The DOJ lawsuit, I think, is rather foolish. So all I'm saying is I have leveraged into Apple, and they have the most cash reserves of any company right now. So with all of this money, they have like about $116 billion lying around. They can easily leverage it into AI research, which they probably have already done by now. They don't have to announce it. And when they do have a product out, all of a sudden you'll see a stock go up. So I'm just saying, if you do want to go short market, sure. But if you're going long in the market, then Apple is something everybody should have at least a little bit of on this dip, in my opinion. Not a financial advisor, but I think everybody should. Now, for the next step of today's video, we want to go ahead and talk about our profit and loss percentages in the algorithm. If you guys know, I have a Discord, and I have programmed an algorithm to go ahead, give out trades to everybody. I have a Diamond, Legend, and All Access tier. So I go ahead, have a bot which tells people when to buy, when to sell. Link to Patreon is in the description if anyone's interested. But last week, we were averaging about 2% profit per play. This week was a little tougher on us. And I said, I'll be very transparent with how this algorithm performs. That's the entire point of it. So we had a total of 15 plays. There are 13 winners and 2 losers. Now, the losers, one was really, really big. This is something that cannot be ignored. Negative 14.45% lost on the stock is a lot. And I have to be very transparent to show you guys what the algorithm is doing, right? So even though we had an average win-loss percent of 1.34% profit per play, this one big play definitely cut off a lot of our profits. And I was taking a look at it, and personally, my algorithm did what it had to do. The covering part could have been better, and the loss could have been lowered to about 11 or 12%, which is something I'm working on. But with considering trading fees and slippage, this is still an okay number. This means you wouldn't be losing money had you followed all these plays. So algorithm's doing good. It's been in the motion with the same technical analysis for the last month or so, and every week has been profitable. I know these aren't huge plays, but nobody can bang out huge plays or everyone would be a millionaire. There's nobody that's done it, maybe for the exception of Renaissance Technologies, but I'm very, very happy with the algorithm play so far. I will be updating you guys next week to see what the algorithm is doing. And again, every week I am tweaking it to make it a little better, get a better edge. But again, my analysis here, I have never gone this balls deep into a stock before. So I'm very confident with Apple. That's what I had for the video. If you guys did enjoy, please hit that like button, subscribe. I'll see you guys in the next video, and peace out.